Good evening, everyone. Time for another silver update. This is the long-term monthly chart of the Euro Swiss franc cross, and it's provided by netdna.com. You can click on the link below. The reason I'm showing you this chart is because it's something we're going to look at in a couple of stories that were on Zero Hedge tonight, and the silver market is really pretty much dead right now, so there's not a lot to look at different from last night. A couple of things I wanted to point out before we get over to the stories. The reason why I pulled up this long-term chart, if you'll remember, the intervention in the Swiss franc that occurred here, central bank intervention, this was in essence the moment when the Swiss pegged their currency to the euro, if you remember that. And we'll get a closer view here. And that was under the auspices of protecting their industry from foreign competition because their currency supposedly was getting too strong. Now, I've never bought into that argument, and I think that's just a great big fabrication. I don't think it has anything to do with what happened. Money was flooding out of the euro, and even flooding out of the dollars, flooding into the Swiss franc, and due to pressure from the whatever they are, Illuminati oligarchs that run all these banks, they forced the Swiss government to betray their own people and peg their currency to the euro. And the reason why I put up this really long chart here is you can see that if it's true that the strength of a currency causes the inability of the industry in that country to compete internationally, then one would have to say that at this point right here, at this high point here, all of those businesses should already have been bankrupt, because you can see that the currency was cut in half from 1977 to about 2008. So I've always argued that that's a nonsensical argument, and that a country wants a strong currency. There's a lot of things that countries can do to bolster their industries, even though they don't have to, because obviously imports are so much cheaper for them. So I consider it a bogus argument, always have. A lot of people are going to disagree with me on that. That's fine. Now, this is the long-term chart of the Swiss franc and the US dollar. You can see it's even a more dramatic move here. You can see the Swiss franc was all the way up at 4.3, and we're all the way down to actually below 0.8. So an enormous decline in the value of the dollar against the Swiss franc. I don't know how much Switzerland exports or did export to the United States. So that's kind of beside the point. But let's get over to the stories that I wanted to talk about. And the first thing I want to bring up here is that the blog has changed a little bit here. The current theme that I had was not allowing me to do a lot of things that I wanted to do with the blog. So hopefully this is a better format. There's more width there, and there's sidebars on both sides, so that there's more information and larger pictures. So welcome the feedback if anybody has any ideas or suggestions. So I want to jump to that story that was covered on Zero Hedge, and this one is Capital Controls coming to Greece, and this one is submitted by Bruce Crasting. He says, a few weeks ago I wrote about my conversation with a friend in Athens. At the time, I believed the June 17th election would bring a different result than the May 6th election disaster. Catalyst for change being the fear of leaving the euro. So far, he's been proven right, so I called to get an update. And then there's a headline here about the pro-bailout Democratic Party. BK, it seems you might be right. The polls from Greece this weekend, given the European markets a lift today, do you still believe the centrist parties will win sufficient votes to form a coalition government, avoid a catastrophe. Athens. Only an effing idiot would invest money based on these polls. BK. Are the polls not correct? Athens. The European leaders have scared the Greeks with their talk about throwing Greece to the wolves, so yes, I think the fringe on the extreme right and left will not get as many votes as they did on May 6th, but Syriza anti-bailout has gained votes. The election is a complete crapshoot. It may not matter. It's not certain that Greece can make it to June 17th without a crisis. BK, explain that. Athens, there's no money left in Greece. In the first 2 weeks of June, the government and the banks will face a huge cash squeeze. Every day, more and more money leaves as depositors withdraw cash and transfer money out of the country. Keep an eye on that. That's the issue we're going to talk about here. Is capital flight, exchange controls, capital controls. It's clear to everyone who lives here, Greeks are not stupid. Either exchange controls happen before the election or they'll happen immediately after. The election will not change that either way. What do you mean by exchange controls? A ban on money transfers out of the country. Limits on the amount of cash that can be withdrawn from a bank ATM. What are the odds that this happens before June 17th? The election is now 20 days away. For Greece, that's a very long time. If the Europeans wanted to send a message to Greece, they would stop the emergency lending. So I would say it's a 50-50 that we see some measures before the election. Last week, there was a funny-looking move in the euro-Swiss franc cross rate. We now know that this blip was an insider who bailed out on a short euro-Swiss franc position after getting a call from the head of the Swiss National Bank, Thomas Jordan, who would soon be publicly talking about exchange controls in Switzerland. Now keep that in mind. Exchange controls in Switzerland. Why do you have exchange controls? I think they're going to try to argue here that this is a fear of money rushing in to the Swiss franc. I don't think so. We just had them argue here with the euro Swiss franc pegging that when they did this little number here, they were arguing that the people, their currency was going to be too strong. They wouldn't be able to compete. Now that they're pegged, are we going to say that the currency is too weak and the people are going to want to get it out of the country? So something doesn't pass the smell test on that one. I'm not really sure what type of exchange controls they're talking about for Switzerland. And this is a headline: Swiss eye capital controls if Greece goes. Emergency scenario: the National Bank, SNB checks introduction of capital controls would escalate the crisis. If Greece comes out of the euro, measures may be required for Switzerland that go far beyond exchange rate limit. The move in the direction of exchange controls is not just a matter for the Swiss National Bank. The entire government is behind the effort to ring-fence the country from its neighbors' troubles. At the request of the Swiss Central Bank's Switzerland National Bank Financial Market Authority has formed a crisis committee. Members include Federal Councillor Evelyn Widmer-Schlumpf, SNB President Thomas Jordan, and FINMA President Anne Herrieder-Locke. The crisis group has the authority to do pretty much as it pleases. If it wanted to introduce exchange controls in Switzerland, it could do it in an hour. I'm sure that a complete roadmap of policy actions has already been laid out. I'm also sure that benchmarks have been set that would trigger the introduction of exchange controls. Certainly one of those benchmarks would be if Greece establishes its own set of controls or formally leaves the EU. We're very close to those triggers. There's a very strong possibility that exchange controls are established in both the strongest and weakest countries in Europe in less than a fortnight. Here's this idea again. The strongest and weakest. Why do you need exchange controls in the strongest? No one's explained that. If these two extremes establish capital barriers, the other countries of Europe will be forced to take similar actions in a matter of months. Who will blink first? Will it be Switzerland or Greece that ignites the fires in Europe? My guess is that Switzerland will force the issue onto the table. It will happen very soon. Now, why does the money from Greece have to go to Switzerland? There's plenty of places that the money from Greece can go to besides Switzerland. So, again, I'm not buying this. And he says he has no positions in the Swiss franc crosses. There's nearly 10 million homeowners in Eastern Europe: Hungary, Poland, the Czech Republic, Romania, Croatia, who have a mortgage in Swiss franc. I think that these folks have something to worry about. What happens in the FX market over the next month or so is not clear. What will happen to the euro-Swiss franc rate in the next few years is clear as it gets. Now, I find it absolutely shocking that anybody would take a loan, a mortgage loan out in a foreign currency and expose themselves to the potential currency risk of their own government printing away and devaluing the currency and then having them owe an enormous amount of money to foreign bankers. That's just crazy. I can't believe that that even happened. But anyway, so that's the first story on exchange controls. There's actually another story that's also on Zero Hedge, and this is about the Somali American remittance dilemma. And this is, I'm not going to read the whole thing because I'm going to run out of time, but this is actually about the Hawala remittance program, which is kind of a Islamic way of transferring money that they have. It's kind of like a community-based thing, but it's brought the radar up of the Homeland Security dem dern terrorist FinCEN looking under a bush types for those dern terrorists. And so there's a big suspicion about these Hawalas that are transferring money over to Somalia. So this guy from Forbes, this John Matonis, brings up the point here. He says, unfortunately, it's not an isolated incident. This scenario is likely to happen more and more as onerous bank secrecy and U.S. Patriot Acts make it increasingly difficult for financial institutions to be in full compliance with anti-money laundering regulations. Instead of trying to comply, they are electing to opt out so as to not encounter heavy federal fines. It sure would be nice if the world had a decentralized, peer-to-peer digital currency that could be transferred to mobile devices in a secure fashion. Wait a minute. Doesn't Bitcoin allow for rapid and trustworthy international value transfer? Isn't Bitcoin fairly easy to obtain in the developed economies of North America and Europe? Doesn't Somalia have good telecommunications infrastructure supporting mobile phones? Here's how the Bitcoin money remittance process would work. A hard-working, honest Somali American wishes to send the equivalent of $150 to his mother in Somalia, so he purchases Bitcoin at one of the many exchanges that accept cash deposits at banks for Bitcoin. Alternately, our would-be remitter could use Bitcoin OTC over-the-counter exchange and arrange a person-to-person sale based on reputation history. Once a Bitcoin is stored safely in the remitter's client wallet, he'd ask the overseas recipient to generate a Bitcoin receiving address using one of the many Bitcoin wallet apps for Android. Sorry, but Apple's App Store is currently restricting Bitcoin wallet apps with send or receive capability. Now, whose side are they on? After his mother in Somalia had received and confirmed a Bitcoin transaction in approximately 10 minutes, she would be able to maintain the Bitcoin balance or change it out into her local currency, the Somali shilling. Bitcoin exchanges are already springing up in countries around the world, including Brazil, Latvia, Philippines. Hasn't happened already. A savvy merchant in Somalia will start accepting Bitcoin for Somali shillings, or a traditional currency exchange dealer can get into the action too. The spreads are certainly there. In September 2010, the mobile penetration rate in Somalia was estimated at 26%, over a population estimate of 9.9 million. Since the financial flow would be principally in U.S. dollars to Bitcoin to Somali shillings, several aggregators could make a market in Bitcoin and then sell their Bitcoin in the market to the other intermediaries. All it takes is a few Somali-based Bitcoin outlets to open up their economy to the rest of the world economy. As a distributed network, Bitcoin possesses a capability to route around interference and disruption. In fact, this was the key design consideration as resiliency has grown to become an imperative for privacy-enhancing electronic cash. Its detractors remind me of the Holy Papacy being fearful of the printing press because it allowed for individual interpretation and diminished mankind's reliance on the anointed biblical teachers. Fascinating. Now it's coming from Forbes. John Matonis, I don't know how famous he is, but clearly this is mainstream media. Wanted to take you to my report on the channel I had, Bitcoin, I still have, but haven't been doing anything on it, the Bitcoin channel. And this is Bitcoin Report Volume 12 called Bitcoins and Borders. And I'm going to play a little bit of it. I'm talking about the Jews, and it starts with the East Germans after World War II, and they're trying to get their money out of East Germany because they're expecting a Sovietization of the country. So we'll listen to that here. Taking advantage of the zonal border between occupied zones in Germany, the number of GDR citizens moving to West Germany totaled,
and it gives the totals. One reason for the sharp increase was the fear of potential further Sovietization given the increasingly paranoid acts of Joseph Stalin. 226,000 had fled in just the first 6 months of 1953. So you can see that people tend to vote with their feet, especially when they see a totalitarian system taking hold. Now, if you remember, in the pre-World War II Nazi Germany, a number of the Jews escaped because they saw what was coming for them, and wisely so. They escaped to America and other free countries, and a lot of them took their gold, they took them in their teeth, they took their gold any way they could carry it to get out and start a new life in a free society. So I want to look at real quick the concept of capital controls. Capital controls are restrictions that are made that prohibit the sending of money outside of a nation. They're usually used by either totalitarian or bankrupt nations, and a nation's government can use these to regulate the flows into and out of the country's capital account. These include exchange controls. Now, exchange controls, these are imposed by a government on the purchase or sale of foreign currencies by residents, or on the purchase or sale of local currencies by non-residents. Common foreign exchange controls include banning the use of foreign currency within the country, banning locals from possessing foreign currency, restricting currency exchange to government-approved exchangers, fixed exchange rates, and restricting the amount of currency that may be imported or exported. So why am I going over all this? Well, the main point is this, that traditionally totalitarian governments, or governments that are verging on totalitarianism, start to institute these types of things: currency controls, exchange controls, capital controls, to prevent those who see what's coming from fleeing the country. Now, how does this relate to Bitcoin? This is how. The Bitcoin has no borders. The Bitcoin is a currency that exists in all of these nations. So, those who hold Bitcoins, and I will cover in some later commentaries about how you can move your Bitcoins, and there's many ways. In fact, you don't really need to move them. Your Bitcoin wallet doesn't take up that much space, and there are a lot of places you can put your Bitcoin wallet, especially if you encrypt it and use Zimmerman's privacy, and that's, again, why I consider that a revolutionary idea, along with the Gutenberg Press, as I covered in Volume 10. But if you encrypt your wallet and place it, and you can make as many copies as you want, you can put it anywhere on the internet, and it's worthless to anyone but you as long as you know the encrypted password. So what if one of these countries becomes a totalitarian nation and you have to flee? No longer do you have to do what the Jews did and hide your gold in your teeth, or swallow a balloon, or try to get through some kind of horrific homeland security checkpoint. You just simply exchange your goods for Bitcoins, and you upload your Bitcoins somewhere, only you know where. You flee the totalitarian nation, you come into the new nation, you establish residence, and you download your Bitcoins and you exchange your Bitcoins, and you've effectively moved jurisdictions using Bitcoins. So this is a tremendously revolutionary idea. It is another value of Bitcoin, and it's another reason why the Bitcoin is an idea whose time has come, and the Bitcoin will be one of the biggest blows to the New World Order and totalitarian governments that has ever come down in history. And I'm just so excited about the Bitcoin because it's an idea, and if the Bitcoin fails, other Bitcoins will happen. If Mt. Gox fails, other markets will happen. And
So that was my video almost a year ago. It's interesting to see that Mr. Matonis has finally, someone in the mainstream media has finally gotten the point, and it's only going to grow. Now, I've got a chart here for you. This is a long-term chart of the Bitcoin, and you can see we had the tremendous crash where we had a run up. So that's clearly a parabolic spike and crash, and you can see we've got the bottoming effect, never back to all the way down. Looks very similar to AOL, Microsoft, Cisco Systems, some of the dot-com stocks that ran a tremendous amount. You can actually move this to percentages, and you'll see if you move the data to percentages that it's still, I don't think I have that here, but it's still a very, very high return on a percentage basis. I think it's something like 9,000% from where it originally came from. So, but that doesn't matter. The price could sit here and stay at 5 for forever, and for all intents and purposes, it would function for this purpose. So we're starting to see the beginnings of capital controls. Really, it was kind of inevitable when you think back on it, and you realize that the Swiss government betrayed their own people by pegging their currency to a bankrupt experimental currency. And these oligarchs and Illuminati banksters and world-class swindlers are never going to admit that they were wrong, that the euro is a failure, that it's probably not going to be the new reserve currency, most likely some kind of currency in Asia. These people, of course, think they're a kind of gods or something, and they can determine the future. It's actually pretty hilarious to see them with egg all over their face, something similar to the Catholic Church having egg on its face for a number of centuries after the Gutenberg Press came out, and pretty much set them back for nearly 1,000 years in their schemes. So that's what we're seeing here with the Euro Illuminati World Bankster order, and now they're starting to get desperate. We're talking about exchange controls and capital controls, and of course that's inevitable because when people see what's coming, they flee with their feet. But unfortunately for the controllers, now they have some interesting alternatives. They have physical gold and silver, and they also have bitcoins that they're looking at. So we definitely want to keep an eye on this and see where it's going, and we'll talk to you next time.